what's going on, everybody? It's the Blockchain Raccoon, keeping you updated with the latest cryptocurrency news and analysis. Well, folks, I hope you're having a fantastic Thursday, because we're going to dive into what a central bank digital currency is, its role, its importance. And this is going to lay the foundation for another video that I'm kind of working on right now, putting the information together with HBAR and Project Newton. There's just so much information in this space. It's mind-boggling. This makes my little raccoon hairs tingle on my back thinking about how the future of everything is changing. Our financial infrastructure is changing behind the scenes. They got us all looking left and right with all this cockamamie crap in the news while they're sitting here planning on changing our financial system. And it's going to happen at the flip of a switch. So don't get caught with your little raccoon pants down here. Well, folks, what is a central bank digital currency, or CBDC? Now, you all are aware that central bank digital currencies are emerging as a hot topic in the financial space. Banks, institutions, and governments are performing research and analysis on the economic and technical feasibility of introducing a new form of digital money and its impact on monetary and fiscal policy. A Bank of International Settlements report states that over 80% of central banks are already researching CBDCs. It begs the question, why are these institutions preoccupied with CBDCs? In this explainer, we'll cover CBDCs, their importance in digital economies, countries exploring their use case, and the road to mass adoption. Skynet. Alright. Cryptocurrencies, as we know them today, are extremely volatile and lack government backing. But we're working on that. CBDCs overcome these concerns while using the same underlying distributed ledger technology of cryptocurrencies. Governments recognize CBDCs as legal tender in the issuing central bank's jurisdiction, meaning anyone can use them for payments and every merchant must accept them. In simple terms, CBDC is short for central bank digital currency, an electronic form of central bank money that citizens can use to make digital payments, store value, and CBDCs offer three main elements. 1. Digital currency. 2. Issued by a central bank. 3. Universally accessible. And why should governments issue a CBDC when fiat currency already exists? So, if a country issues a CBDC, its government will consider it to be legal tender. Just like fiat currencies, both CBDCs and physical cash would be legally acknowledged as a form of payment and act as a claim on the central bank or government. A central bank digital currency increases the safety and efficiency of both wholesale and retail payment systems. On the wholesale side, a central bank digital currency facilitates quick settlements of retail payments. It could improve the efficiency of making payments at the point of sale or between two parties. No physical coins or notes will be available to individuals in a cashless digital society, and all money will be exchanged in a digital format. If a country intends to become a cashless society, a digital currency with government central bank backing is a credible alternative. The pressure for governments to adopt the CBDC is strong, as the market for private e-money is on the rise. We see this with Facebook's DM and all this crap. Now, if it becomes more mainstream, and it is, beneficiaries are at a disadvantage because e-money providers aim to maximize their profits instead of the general public's. Issuing a CBDC would give governments an edge over the competition from a private e-money. In addition to domestic transactions, the current cross-jurisdiction payments model depends heavily on a central bank operating the real-time gross settlement infrastructure within which all local banks' obligations must settle. Since time lags exist in cross-border payments, participating parties are exposed to settlement and credit risk. A CBDC is available around the clock while privacy is taken into account to eliminate counterparty credit risk. Now, we're going to touch on the different types of CBDCs because they're not all the same. We have retail central bank digital currencies. A retail CBDC is based on the distributed ledger technology. It's traceable, anonymous, and available around the clock 24/7. It offers possibilities for interest rate applications as well. Due to these advantages, a retail central bank digital currency focuses in particular on supporting the general public. Additionally, it helps lower the cost of cash printing and promotes financial inclusion. Then we have wholesale central bank digital currencies. A wholesale CBDC increases payments and security settlement efficiency while resolving liquidity and counterparty risk issues. It's a great fit for financial institutions who have reserves deposited in a central bank. With their capability to improve wholesale financial system speed and security, even central banks consider wholesale central bank digital currency a favored alternative to existing systems today. Man, say that 10 times fast. Now, we do have countries experimenting with CBDCs, and for China's on the list at the top with the digital yuan. The People's Bank of China is one of the first central banks to develop a CBDC. They deployed a special task force in 2014 to research and implement a digital yuan. It gained traction in 2020 when China announced the testing of a CBDC prototype. The first trial of the digital yuan was held in October 2020 in the Luohao district of Shenzhen. The second pilot program took place in Suzhou City at the beginning of 2021. As the report states, the Chinese digital yuan will impact the $27 trillion payment market in China. Then we have Sweden. They have that e-krona, not like a corona, but K-rona. In 2017, the world's oldest bank, Swedish Riksbank, began its CBDC project called e-krona. In collaboration with Accenture PLC, a pilot took place from 2020 until February of 2021, and the project was extended until February of 2022. The e-krona intends to offer a robust alternative in case of emergency or turmoil of private payment service providers, thereby ensuring the Swedish payment system remains stable. The Bahamas. In 2019, the Bahamas also began their CBDC project called Sand Dollar. It was fully deployed in October 2020. The project was initiated in two districts, Exuma and Abaca Islands. Each sand dollar constitutes an additional digital variant to the Bohemian dollar, which is in turn kept at a 1-to-1 peg with $1. The project delivers inclusive access to financial services and regulated payments. Then we have the Eastern Caribbean area with their DXCD. The Monetary Authority for the Organization of Eastern Caribbean States members, the Eastern Caribbean Central Bank, began their work on a CBDC project called DXCD to reach financial excluded parts of the population. Its prototype is being tested in Antigua, Barbuda, Grenada, St. Lucia, St. Kitts, and Nevis. The main goal of DXCD is to be a retail payment system for citizens without credit cards, for merchant and e-commerce payments at a low cost. And finally, we have the Marshall Islands with their sovereign. In 2018, the Republic of the Marshall Islands shared plans for launching a CBDC called Sovereign, SOV. Currently, the US dollar acts as legal tender on the island, mainly because its population is only 58,729, and the cost of cash printing exceeds its benefits. RMI plans to introduce SOV as an alternative digital money as a legal tender to improve the efficiency of RMI's current payment systems. So that wraps up those guys right now. But also, we do have the Ripple. They just joined the British Pound Foundation for also getting in and exploring a CBDC. So this is accelerating quickly, folks. Now, we do have CBDC's path to mass adoption. Decentralized blockchains today have a user beware attitude. All transactions are irrevocable. Meaning once settled, an asset cannot be recovered if the transacting party is unwilling to cooperate with legal authorities. This is not a viable option for a CBDC aiming for mass adoption. Moreover, no existing non-banking payment system has this kind of treatment under existing laws, nor is it impossible for legal authorities to compel cooperation since the recipient could be unknown person from overseas not subject to abide by the laws and regulation of the CBDC's jurisdiction. Instead, CBDC issuers should modify their state under banking, property, payment, and contract law. This is possible only with hybrid two-layer designs that address two distinct problems. One, a CBDC needs a proper management infrastructure wherein transactions can first be verified and then modified under the jurisdiction's law. A dispute resolution system has security, compliance, and auditing processes, with Hedera acting as a publicly verifiable log of transactions for CBDCs that live in permission blockchain frameworks. Banks that layer customer services on top of the payment layer can trust and verify that transaction information is accurate. 2. A CBDC also needs to report its state, account balances, transactions, etc., to relevant regulatory bodies, which can be more than just the state of the transactions. This includes things like information on IP addresses or account IDs. This information is vital in dispute resolution for payment systems. Using Hedera as a public record, authorities could directly inspect the CBDC state, including the details of how users have interacted with it. Now, to wrap this up here, given the considerable efforts and attention that central banks are dedicating to the central bank digital currencies, they will become a reality soon. Introducing CBDCs to the world will help boost crypto adoption, as people will have access to the platform to convert cryptocurrencies into legal tenders. Moreover, it will also help the financial inclusion of the bankless population. CBDCs will have a far-reaching implication on the future of finance, including the buying and selling of digital assets and securities. The question is, when? When will this happen? Now, the only answer could rely on the foundations of a dedicated legal framework to facilitate the transparency, distribution, and issuance of a digital form of money by global governments. As regulators and central banks take concrete steps in the direction of establishing CBDCs, the world will begin to embrace digital currencies as the standard. XRP. Hedera Hashgraph's also looking like it's pretty amazing. Well, folks, I hope this was a little bit of education for you. Once again, I am not a financial advisor, so please do your own research on these matters, and I just appreciate y'all. So thanks, and I'm just going to wrap it up. So thanks for tuning in, folks.